Hey there, Investa Bros! Welcome back to our channel. In this video, we'll walk you through our analysis of Berkshire Hathaway's longest held stock, beverage giant Coca-Cola, ticker symbol KO.
Buffett and his investing team have started purchasing since 1988 and have a cost basis of around $3.25 a share. With Coke trading today at $54.5, Berkshire is relishing an unrealized gain of over 1,500%. All of these companies have a place in anyone's portfolio as dividend-paying companies. But we are also looking at opportunities for value, so we'll be looking at ways we can invest in these companies to increase our return, beating the market.
If you're new to the channel, we're the Investa Bros, and every week we make videos covering all aspects of money management, savings, investing in the stock market, and crypto.
We also have a segment that we put out every other day covering the most important financial news. So, if that's a topic you would like to learn more about, make sure to subscribe to our channel. And if you smash the thumbs up button for the YouTube algorithm, that would be super awesome.
And don't forget to hit the notification bell so you'll be updated when we post a new video. Coca-Cola was founded in 1892. Today is the world's largest non-alcoholic beverage company. It owns or licenses more than 500 non-alcoholic beverages, including both sparkling and still beverages. It now sells products in more than 200 countries around the world and has 20 brands that each generate 1 billion or more in annual sales. Its brands account for about 2 billion servings of beverages worldwide every day, producing more than 37 billion in annual revenue. The sparkling beverage portfolio includes the flagship Coca-Cola brand, as well as other soda brands like Diet Coke, Sprite, Fanta, and more. The still beverage portfolio includes water, juices, and ready-to-drink teas such as Dasani, Minute Maid, Vitamin Water, and Honest Tea. This is a challenging time for Coca-Cola. Sales of soda are slowing down in developed countries like the US, where soda consumption has steadily declined for years. Declining soda consumption is a significant challenge for the company. While Coca-Cola's total volume certainly still rely upon sparkling beverages such as soda, the company has gone to great lengths in recent years to diversify away from its core products, understanding that the long-term growth prospect for sparkling beverages isn't particularly inspiring. Before we start off, we'd like to better understand the company's strengths, weaknesses, what are its opportunities and threats. Coca-Cola's most valuable strength is its brand. The Coca-Cola brand is known and well respected throughout much of the world. Their products can be found in over 200 countries, largely because of their unmatched direct-to-store delivery distribution network. Consumer loyalty is high, with only one major competitor, Pepsi. Coca-Cola has many advantages, including tremendous economies of scale. Their brand, manufacturing and distribution systems, and established relationships with retailers worldwide provide significant barriers to entry for any potential new competitors. In terms of weaknesses, a lack of product diversification is Coca-Cola's greatest weakness. While Pepsi has been able to diversify into other segments, Coca-Cola relies on the beverage industry for its profits and future growth. Another problem is Coca-Cola's need for massive amounts of pure water. In a world with shrinking supplies of potable water, the company's need for water becomes critical. Coca-Cola's strengths provided unparalleled opportunities in developed and underdeveloped markets. Their superior system of production and distribution of their products, so supply chain, gives them advantages to launching new products or purchasing products from other companies that could enable Coca-Cola to grow. For example, the acquisition of Costa, which closed in January 2019, should bolster its presence in the coffee category, particularly in the UK, where Costa has more than a one-third share of coffee houses. The biggest threat is the trend towards healthier beverages. The company must adapt to consumer preferences, including the demand for less sugary drinks. Sales to restaurants and entertainment customers have been also negatively impacted due to COVID-19. In an effort to return to growth, Coca-Cola has invested heavily outside of soda, in areas like juices, teas, dairy, and water, to appeal to changing consumer preferences. Despite headwinds from declining soft drink consumption, Coca-Cola has a favorable long-term growth prospect. The ready-to-drink category is sold through highly diversified channels and continue to have mid-single-digit projected growth rates, both for Coca-Cola and the industry. This is particularly true for still beverages like milk, tea, and water. Coca-Cola's year-old strategy to diversify away from sparkling beverages is due to this, and it is undoubtedly bearing fruit. Coca-Cola also continues to acquire brands in order to grow, including its acquisition of Costa that we mentioned earlier. This was certainly an out-of-the-box buy for a sparkling beverage company, but Coca-Cola is doing what it takes to secure its future growth. The market potential for Coca-Cola's portfolio of beverages is massive, especially in the developing and emerging markets. This should provide the company with a long runway for growth in the coming years. Coca-Cola enjoys two distinct competitive advantages, which are its strong brand and global scale. According to Forbes, Coca-Cola is the sixth most valuable brand in the world. The Coca-Cola brand is reportedly worth $64.4 billion. In addition, Coca-Cola has an unparalleled distribution network. It has the largest beverage distribution system in the world. Of the roughly 60 billion beverages consumed around the world every single day, about 2 billion come from Coca-Cola. These advantages allow the company to remain highly profitable even during recessions. The company held up very well during the Great Recession. Not only did Coca-Cola survive the Great Recession, it thrived. Coca-Cola grew earnings per share by 36% between 2007 and 2010. This shows the durability and strength of Coca-Cola's business model. The company's dividend also appears very safe. Let's take a look at some of the key metrics we analyze when evaluating a company. Coca-Cola's share price is $54.48. Coca-Cola's earnings per share for the trailing 12 months ended in June 21 was $1.87. Therefore, Coca-Cola's PE ratio for today is 29.13, which is within its latest 5-year range. Comparing this to its closest competitors in the beverage non-alcoholic sub-industry, we can see that all of them are within a 10% range. Still, the PE ratio is slightly higher than what we would normally consider as good, so it will be an X for this metric. However, they have a great profit margin of 22.19, so this is a big positive for the company. Let's now look at the revenue growth for the last 5 years. We have 41.86 billion back in 2016 and 33 billion in 2020. So it seems that the company is unable to increase its revenue. If we look further back, we can see that the company is struggling since 2013 with lower and lower revenues. Even though revenue has been decreasing, it seems profitability has actually increased from 6.52 billion in 2016 to 7.75 in 2020. Coca-Cola's shares outstanding for the quarter ending June 30th, 2021 were 4.33 million, of a 0.51% increase year over year. Since in 2016 there were 4.31 million shares outstanding, we'll call it a check, but barely, since the macro trend seems to be down, with more than 4.7 million shares outstanding back in 2005, meaning an overall 9.4% decline. Coca-Cola total assets for the quarter ending June 30th, 2021 were 90.2 billion, a 4.75% decline year over year. Coca-Cola total long-term liabilities for the quarter ending June 30th, 2021 were 50.64 billion, a 4.09% increase year over year. So we have more assets than long-term liabilities. We have a check here. Free cash flow, which is used to pay dividends, buy back shares and make acquisition, has been growing over the past 5 years, with 6.53 billion back in 2016 to 11.49 billion as of June 2021. So we have a check for this metric as well. Let's now compare the valuation of the company to the free cash flow. The average cash flow for the past 5 years, considering the data available in June, was $7.4 billion. Multiplying this by 20 and we get a valuation of $148 billion. This is 37% below the current valuation of the company, which is $235 billion. This was expected since we saw in the beginning that we have a high PE ratio of above 29. As with all other companies we will be discussing in this playlist, we can't speak about Coca-Cola and not talk about dividends. Coca-Cola's current annualized dividend is $1.68 per share, which was raised from $1.64 earlier in 2021. Coca-Cola has increased its dividend for 59 consecutive years and has paid a dividend since 1920, making it a member of the S&P Dividend Aristocrats Index. This is an extremely impressive history of consistent dividend increases, even in difficult operating environments. investors can expect the company to continue increasing its dividend for many years. We do have to point out that Coca-Cola has paid $8.91 billion in dividends, and considering that the 5-year average cash flow is just $7.4 billion, it becomes quite concerning. It's time to perform a discount cash flow analysis for Coca-Cola. So let's jump in the Excel and see what we get. The free cash flow estimates for 2021 are $9,416 million. I usually choose a 5% annual growth rate, a 10% discount because I want a 10% gain for my investments. Considering that the long-term growth prospects for the sparkling beverages isn't that inspiring, for the long-term growth rate, I will choose only a 2.5% increase year over year. Coca-Cola currently has 4,338 million shares outstanding and a long-term debt of $39,804 million. Based on this data, the intrinsic value for Coca-Cola is $25.56, which I believe is quite low as my discount rate of 10% is quite high. So I will adjust that, reducing my expected gains to only 8%. And this will give us an intrinsic value of $39.15, which I believe is quite on the mark. Coca-Cola's dividend yield is currently 3.07%, a bit higher than the industry average of 2.92%, but much higher than the S&P 500 average dividend yield of 1.33%. At the end of the day, from a dividend perspective, I believe that Coke is a great addition to a dividend portfolio, especially since Coca-Cola should continue to pay its dividend and it should have little trouble raising its dividends year after year. From a value perspective, the stock appears to be overvalued, which means that right now may not be the best time to buy shares. If you want to learn more about how I plan to benefit from a price pullback and make higher gains than simply buying the stock at the current price, please consider joining our Patreons, where we will share additional content regarding the company. If you like this video, please consider subscribing to our channel and hit the notification bell so you will be updated when we post a new video. Let us know in the comments below which company you would like us to take a look at in our next video. Until next time, all the best, including both sparkling and still beverages. It now sells while Coca-Cola's total volume certainly still rely. The Coca-Cola brand is known and well respected throughout the since in 2016 there were but barely since the macro trend is a bit higher than the industry average of 2.92, but much higher the Coca-Cola has a long and established track record of delivery, especially since Coca-Cola should continue to pay its dividend and it should have little trouble raising its dividends